Welcome back. So you said you didn't see rate cuts 2 months ago. We spoke on the 16th of February. It's now the, 18th or 19th of April. What do you see now? Same?
Oh, well, back in 2 months ago, I was really just looking at the numbers, just like many other portfolio managers and financial advisors around the country, just looking at CPE, PPI, employment rates, and we really didn't see any reason why a Fed should cut rates, and so that's why I had that thesis. I think going forward, I think one thing that you've got to really look at is November, right? We're in an election year, and it's really hard to see that Powell wants to play this kind of role of raising or lowering rates in an environment where November's the election. He doesn't want to come out looking favorable to either party. So I think it makes sense just to stay the course. And December would be the closest possible date you'd see any kind of movement from the Fed because of the election.
So what does that imply then for what I should do with my money? I mean, you have some things you like. You like the XLE, energy. You like gold, SMH, I guess that's semiconductors, big tech.
Yeah. So listen, I think that XLE up 12.8% year to date. I think it's going to be even more of a play because of what's going on in the Middle East. If you see the Strait of Hormuz get disrupted, it doesn't have to be Iran. It could be a number of different actors.
Could be the Houthis.
Exactly. And so if that happens, you could predict anywhere for 2 to 5% increase in energy around the world. Right, that's 20% of all crude oil around the world goes through that strait. And listen, we are in a new phase between Israel and Iran in regards to what they're capable of and what they're doing. And so everyone's on edge. All my clients are wondering how this plays out. And so you're looking at to hedge, buy gold. And if you're thinking that this is going to be an ongoing issue, you got to own energy.
Would those edged customers and clients, and yourself included, would you be a little less on edge because of what has just happened overnight with Israel attacking Iran, but in what appears to be a relatively tempered way? So maybe some of that tension is dissipating just a bit.
Listen, you can grab at straws anywhere you want, but they just fired 100 missiles in Israel, and then Israel just attacked them 24 hours ago. So if you're feeling comfortable, I don't know why. And so I think that they are de-escalating verbally. I'd like to see that happen actually. And so until that happens, I think that every investor should get defensive.
So what should I do if I have some cash that I want to take out of my equity portion of my portfolio, perhaps because it's grown up against the upper bound, not because of anything I've done, but just because it's expanded so far this year, and I want to put it to work in fixed income? Where would you put it, and at what maturities?
Listen, I think that fixed income is an important part for investors who are looking for income, and they're also looking for preservation of capital. But that hasn't happened in the last 3 years in the fixed income market. So I have a lot of clients that are looking at money market rates. They're over 5% right now. Great place to hide out while you're doing that. Also, with the President Biden talking about $400,000 or more, you're going to be taxed more. A lot of folks are talking about munis now and where they can go to protect some of their hard-earned money and go into an environment. Fixed income investment that'll be tax efficient, right? Yeah. You can get triple tax exemption if you're getting a muni in your state. So those are all things that clients are talking about and where they should be invested in.
So you don't expect a rate cut until, at the earliest, December of this year. What will it take to cause that to happen? What will the Fed need to see, and for how long?
You'd have to see some serious things happening with the employment rate. You'd have to see core CPE go way below 2.6. I mean, there's a number of different factors that we're all looking at. And right now, none of those are saying and screaming out to the Fed they need to make a rate cut. So I think politically, which I think is obviously we always have to think about when you're thinking about the government, November is the date that they've got to wait before they make any significant decision in this election. So jury's still out, and I think November is.
You made a bold, counterintuitive call back in February, and you're doubling down basically at this time. Appreciate your clarity.
Absolutely. Good to see you again, Tyler.
Yes, same.